It's easy to do what we do. We, I mean us, stock traders, us stock investors, when everything's green and everything that we buy just keeps going up. But when we wake up a couple of days in a row and everything's red, it gets a little bit more difficult. This is when that unwanted roommate in your head comes forward and says, you don't know what you're doing. You don't understand. This whole thing's going to collapse. And so it gets difficult. So I thought, as I see my portfolio going down 2 days in a row, I thought I ought to go to the portfolio, look at it with you, and tell you how I think about things and how I view it. So we're going to do that in a second.
Best of Us Investors presents Kerry Grinkmeyer.
I'm Kerry Grinkmeyer. I'm the host of Best of Us Investors. I like to call us a tribe. We have about close to, I guess it's 135,000 subscribers. About 18,000 of those meet in our village. It's actually our Discord. And if you want to be a part of it, you go to bestofusinvestors.com. You'll find there a place you can leave your address and your name, and then I'll send you an invitation to join the tribe. But let's talk about the hard days, the days like today when everything's red. Okay, today the market is down quite a bit, and I have told you one of the indicators that the market is turning is your comparison of the S&P 500, that's this blue line, and that's our March drop, and the 20-year Treasury. And as you can see, they move conversely in opposite directions. And as you see, if we zero in closer today, because the market is down a good bit, you can see the Treasury is clicked up and the S&P has clicked down. Is this the time then to panic and get out? I don't think so. I think it's happened a little bit because there were some reports this morning, some numbers that indicated that inflation is taking in, which if inflation kicks in, there is a possibility that interest rates are going to go up. But let's don't forget, we have a stimulus package more than likely coming our way, and that is going to have a major effect. So let's now move over to my portfolio, and you can see I'm down about 1.5% today, about 14,000. That was as down as much as 25,000 not that long ago. Let me show you how I look at my portfolio. One of the first things I do is come up here and click on net gain. I want to see who's my biggest loser today. And here I can see it's one of my biotech stocks. This is a communications for satellites. And this is bingo. It's a genome sequencer. It's down 7%, but yesterday I believe it was up about 10%. So I'm not really concerned about that. So then I come over here and I look at my net gains and losses. This is a penny stock that I've held for years, and it's just not worth me selling it, so I'm just leave it there. But my big downer for my portfolio, you can see my big loser is 11%. And that's Edit. And this Edit is down some 1.5% today. If it gets down to about 53, I'll buy in. I'll buy more. I'll add to my position because I believe in Edit. Edit is one of the major users of CRISPR. And CRISPR is under a little bit of pressure right now as well. I'll have to search to find it here. But this is technology. They didn't have the earnings that they had anticipated. Some of the collaboration efforts that they've had last year didn't materialize. But I believe this is a company, Edit and CRISPR, are going to extend my life, and therefore I'm a big player. Here's CRISPR. It's down almost 4% today. But as you can see, I'm still up 30% on it. So it's a better than average performer in my portfolio, so I'm good with it. So that's how I look. What I really want to emphasize today is when you're down 16,000, when you're down over probably 3% in the last 2 days, it takes courage. It takes courage to look at your portfolio and say, okay, what do I have, not relative to what's happening today? What do I have relative to what's going to happen in the future? And am I okay with it? Do I believe if we do get inflation, if we do get higher interest rates, that Edit and CRISPR and some of these other stocks that are involved in technology and 3D printing, are they going to be good for me? Yes, I do believe they are going to be good for me, so I'm going to hold them. That's how I look at my portfolio on a difficult day. I think the real issue here is if you're watching this video and if you're watching other people's videos and if you're going to a Discord and you're chatting with people and you're working to learn, I think you're on the right track. You have recognized that you have a privilege to own some of the best companies in the world. And when I say the best companies in the world, I'm talking about the Amazons, the Googles, the Apples, the Facebooks, the Teslas. Those are the best companies in the world. And those are just mainstays that you should hang on. But then there are other parts of your portfolio, at least for me, that somewhere between 10 and 20% of it that I want to invest in the future. The companies I just mentioned, the big six plus Tesla, they're the companies of the past. Yes, they are in the future major players, but they're established. There's little doubt. There are other companies that are emerging. They are on the cutting edge of technology in their fields, and they have the greatest growth potential. And that's what I'm talking about here. I don't even concern myself if I see that Apple or Amazon is going down today. That's a non-issue. That's not hard for me to deal with. Hard for me to deal with is that $12 stock that I bought and it's now worth 36, and should I get out? Well, again, this is where the mind comes into play. This is where you have to work hard to say, I know what the hell I'm doing. And how do you get there? Yeah, I can help you get there, but really you need to read. You need to understand the world we live in. Yeah, you need to understand artificial intelligence and machine learning and how data is going to play in the future. You need to read about lifespan and CRISPR and understand what is really happening here. If you don't read these things, and all you have to rely on is my mind or Stock Mo's mind or Graham or Kevin's mind, you won't get through these hard times. But if you control your mind, and I've written a book that explains how I gained control of my mind, and I strongly recommend this. You put this on your reading list as well. But when the market isn't open and you want to become stronger and better at what you do, go to bestofusinvestors.com. We have a library there. These are the books I recommend that you read in your off time. This is your on time. The market's open. This is your off time. Educate yourself. It's going to make your life so much better because you're going to have confidence that what you're doing is right. It's going to work out in the long term, and you won't get hung up on these short red days. And it may, this is the second day in a row, and it may go 5 days in a row. But you need this working for you, and you won't get it working for you until you educate yourself. Until you feel, I'm the smartest guy in the room. I got this down. And I'm not a neurosurgeon, but I'm as smart as a neurosurgeon in my chosen field. And your chosen field is the stock market And I would strongly recommend you pick 3 to 5 areas that you're just going to totally understand it. Okay. Again, I'm Kerry Grinkmeyer. I'm a retired financial advisor. I want to share my knowledge and my experience so that you can become a better investor. We have 3 goals here. One is to make better investment decisions, and this is how you make better investment decisions. Number 2 is to keep more of what you make, and that's to understand your tax code. And I'm building Best of Us University, and you'll see more about that in the future, where I'm going to have CPAs talk to you and educate you and tell you how to set up a separate tax entity so that you can keep more of what you make. I'm going to get financial advisors to talk to you so you understand the difference between an IRA, a conventional and a Roth IRA, and a SEP and a solo 401k, so that you can keep more of what you make and you can build wealth. And then I'm going to get those financial advisors to tell you about trusts, and because you're going to have too much money and you're going to need to shelter it. So that's what Best of Us as investors is all about. I'm not going to tell you what NEO is going to be worth next week, next month, next year. I don't really care. I own it. I'm okay with it. I'm okay with Tesla. But I want you to understand what you own, why you own it, and why you either want to continue to own it and build on it or get rid of it. That's what this is all about. Okay, thanks for spending some time with me. I try to do this every morning, so look for me tomorrow morning. Bye-bye.